Tax Apocalypse 2025? Are you about to be robbed blind? Are you ready to have your wallet raided by Uncle Sam? The tax landscape is about to shift dramatically, and if you're not prepared, you could be facing a financial bloodbath. The 2017 Tax Cuts and Jobs Act, a TCJA, that temporary sugar rush for some, is about to expire at the end of 2025. This means a whole host of tax provisions are set to vanish, potentially unleashing a tidal wave of tax increases on unsuspecting Americans. Are you aware that your tax bill could skyrocket in just a few short years? The TCJA brought lower individual tax rates, a doubled standard deduction, and other changes. But these were always temporary. Now the clock is ticking, and the question is, will Congress act, or will we all be forced to pay the price? Imagine waking up in 2026 to find that your tax burden has increased significantly. This isn't some far-off dystopian fantasy, it's a very real possibility. We're here to break down what's at stake and how you can potentially protect yourself. So, what exactly is expiring? The sunsetting provisions of the TCJA include the lower individual income tax rates, the increased standard deduction, and changes to various deductions and credits. These changes will disproportionately affect different income groups and not always in the way you might expect. Let's talk specifics. Tax rates are poised to revert to their pre-TCJA levels, meaning higher taxes across the board. The standard deduction, currently inflated, will shrink, forcing more people to itemize or simply pay more. Are you prepared for this double whammy? For example, a middle-class family could see their tax bill increase by thousands of dollars. Small business owners will also feel the pinch with the expiration of the pass-through deduction. This isn't just about the wealthy. It's about everyday Americans struggling to make ends meet. Bonus depreciation, a favorite tool for businesses to write off investments, is also on the chopping block. This could stifle economic growth and make it harder for businesses to invest in their future. Is this really the best way to stimulate the economy? The future of the TCJA is a political football, kicked around by warring factions in Washington. On one side, you have those who want to extend the tax cuts, arguing that they are essential for economic growth. On the other, you have those who want to let them expire, arguing that they disproportionately benefit the wealthy and contribute to the national debt. President Trump has made it clear he wants to extend the tax cuts, and perhaps even deepen them. His supporters argue that lower taxes incentivize investment and job creation. But is this trickle-down economics really working for the average American? Democrats, on the other hand, are likely to push for higher taxes on corporations and high-income earners. They argue that this is necessary to fund social programs and reduce income inequality. But will these tax hikes stifle economic growth and punish success? The potential for compromise is slim, and the outcome will depend on the balance of power in Congress after the next election. The global minimum tax pushed by the OECD adds another layer of complexity. This could force multinational corporations to pay more taxes, regardless of where they operate. While the TCJA sunset looms, the wealthy continue to exploit tax loopholes that allow them to shield their income from taxation. The carried interest loophole, for example, allows hedge fund managers to pay lower tax rates on their earnings. Is this fair to the rest of us who pay our fair share? The Qualified Business Income, QBI deduction, intended to help small business owners, has also been criticized for being overly complex and benefiting the wealthy. Navigating these loopholes requires expert knowledge, creating an uneven playing field. Retirement contribution strategies can help reduce your tax liability, but they are often complex and require careful planning. The step-up in basis loophole allows heirs to avoid paying capital gains taxes on inherited assets. Is this a fair way to pass on wealth to future generations? The IRS is cracking down on tax evasion. They are using data analytics to detect fraud and are increasing the number of audits they conduct. Are you confident that your tax returns are squeaky clean? Tax inquiries and disputes are on the rise, and the penalties for tax evasion can be severe. The IRS publishes a dirty dozen list of tax scams each year, warning taxpayers about common schemes. Don't fall victim to these traps. The UK is also getting tough on tax evasion, offering rewards to informants who report wrongdoing. This is a sign that governments around the world are taking tax evasion more seriously. Are you prepared for increased scrutiny from the tax authorities? Predicting the future of tax policy is a fool's errand, but we can make some educated guesses. Further tax reforms are likely, and the tax code will continue to evolve. The potential elimination of federal taxes on tipped income or Social Security benefits has been floated, but these proposals face significant political hurdles. Changes to the state and local tax, SALT deduction, are also possible. This deduction allows taxpayers to deduct state and local taxes from their federal income taxes, but it was capped under the TCJA. Restoring the full deduction would primarily benefit wealthy taxpayers in high-tax states. The rise of digital currencies and the gig economy also present new challenges for tax authorities. How will these new forms of income be taxed? The answers are still unclear. The upcoming tax changes will have a profound impact on all Americans. It's time to take action and make your voice heard. Contact your elected officials and let them know what you think about the future of tax policy. Consult with a qualified tax professional to develop a personalized tax plan. They can help you navigate the complex tax code and minimize your tax liability. Don't wait until the last minute. Start planning now. The future of taxes is uncertain, but one thing is clear. You need to be informed and proactive. Don't let the tax apocalypse catch you off guard. Take control of your financial future and fight for a tax system that is fair and equitable. Subscribe to our channel for more tax tips and insights, and share this video with your friends and family. Are you ready to join the tax revolution?